Good evening. Indian markets closed with decent gains at the end of a choppy session as investors hope that the RBI will support growth going forward by pausing its aggressive monetary tightening. For a change, the key indices managed to shrug off the political stalemate in Parliament and the ongoing war of words on FDI in retail. Not only that, they also ignored the general weakness in overseas market and drop in the rupee versus the dollar. The GDP data was the main highlight of the day. The market sort of heaved a sigh of relief that Q2 economic growth didn't come below estimates. India's economy grew by 6.9%, weakest in last 2 years, and lower than 7.7% in Q1. India's GDP growth in the year-ago period was at 8.4%. The finance minister and his chief economic advisor expressed disappointment, as did Modi's. But the key indices still managed to advance modestly. The BSE Sensex gained 115 points to close at 16,123 and the NSE Nifty gained 27 points to close at 4,832. The broader indices weren't so lucky. They were in the red throughout the day, dragging the market breadth down. The BSE Small Cap Index and the BSE Mid Cap Index lost approximately 0.7% each. In terms of sector, oil and gas and FMCG indices were the top winners today, rising by more than 1% each. Tech, IT, power and PSU indices were the other notable gainers. Consumer Durable Index was the biggest loser, down by 2%. Realty, auto and banking indices lost between 0.5% to 1%. The market undercurrent remained jittery due to the ongoing political confrontation over the contentious issue of FDI in retail. The parliament was adjourned today for the 7th day as the opposition parties continued to attack the government over the sensitive issue. The Congress core group discussed the issue but could not take any decision. Not just from opposition parties but also a few allies and some Congress leaders want the government to reverse the decision. However, the Prime Minister and the Finance Minister both have indicated that government won't roll back the cabinet move. At the same time, the centre may have to brace for another political storm, this time over the proposed Lokpal bill. Anna Hazare is not happy with the draft and has threatened another agitation. In short, political developments are likely to hog the headlines in the short term. Weakness in the Asian and European markets also partly affected the mood today. Asian benchmarks closed lower after S&P downgraded several lenders, including top US banks, citing a change in its ratings criteria. The Chinese market was the top loser, down by more than 3%, while the Hang Seng in Hong Kong and the TAIEX in Taiwan were down by 1% each. European stocks fell today as investors digested a downgrade of several global banks by S&P and fresh nervousness over the region's debt crisis. US markets closed mixed to flat on Tuesday. The conference board reported that its consumer confidence index in November rose by the most in more than 8 years. FIs continue to be net sellers while domestic funds are trying to counter that by buying in a weak market. Meanwhile, LIC has cut its investments for FY12 by a third to Rs 400 billion from the 600 billion rupees earlier. Thank you. Wish you have a great evening ahead.